Hi, everyone. Welcome to the latest Carson's Take 5 with Ryan and Sonu. Sonu, we're titling this one, Did the Economy Actually Slow Down? Just last week, Sonu, we saw some weakness in the economy. We've talked a lot about how we're in a bull market. The stock market's been strong, but the economy also is strong. Good news, stock market's still pretty darn strong. But are we starting to see some cracks, Sonu? That's my question. Let's start with retail sales. Retail sales, again, how much people are spending, right? Consumer makes up a lot of the economy. That dropped, getting a little geeky on you guys, 0.8%, expected to be about flat. How worried should we be that for 1 month, Sonu, we had a disappointing retail sales number?
Just speaking for myself, I'm not too worried. Right?
Good. I feel so much better now.
Look, half of that 0.8% drop was because auto sales pulled back in January, which we already knew about because auto sales was strong in December. And then gas station sales also fell, right? Why? Because gas prices fell down. And then you had sales of things like building materials, garden equipment, supply stores, all of that fell. That, dragged down retail sales by a bit. And that was because it was really cold last month. And so people didn't go out and buy all that stuff, right? Maybe you postpone the Home Depot and Lowe's visit by a week or two, right? And now online sales also fell. Now that kind of confounds that weather story. Like, wait a minute, if people are at home, maybe they buy more from, your Amazons of the world. But they didn't. But I think that was because, November and December were really strong, right? So if you average the last 3 months, online sales are running about 4% annualized pace. That's really strong, right? What really surprised me, Ryan, restaurant and bar sales, right? Not to pick another data point where things look really rosy, but it is very rosy. Restaurant and bar sales rose 0.7% month over month in January. Over the last 3 months, it's running just under 10% annualized. That's huge. Wow. Even if you account for inflation, restaurant and bar sales are up just under 7% over the last 3 months. That's really strong. That, I think, underlines what the economy is doing.
Well said. Let's not forget what Master Yoda said. One data point a trend does not make. So what we're getting at, we've seen a lot of strong data points on the consumer and the economy in general. Yes, this was a little weak. It was weak when you look at it, but then you kind of look a little deeper and it's like, maybe there's some reasons. Mainly, people remember the one we did about a month ago, the Take 5, where I was in California. Sonu, you were freezing in Chicago. It really was cold. I mean, maybe people didn't want to go spend as much. So we'll see. We're going to watch it very closely like we always do, but that's something to think about. Now, Sonu, we're about at the halfway point here. Industrial production, right? Industrial production also came in weak. Manufacturing is showing, at least again for 1 month, some potential cracks. And of course, manufacturing makes up about 12 to 13% of the economy. So it's not a huge part of the economy. At the same time, it clearly matters. What do you see when you took a look at the industrial production backdrop?
So industrial production or manufacturing production fell in January, but I would separate it in two pieces. One is there are production of non-durable goods, right? Things that don't last a long time, things like apparel, textiles, chemicals, plastics, right? They have to be, continuously produced and replenished. And that was down a lot. Right? That was down 1.1% in January. But you look at durable goods production. Now, this is where manufacturing really matters for the U.S. because it reads to like people who work in these industries, vehicles, high-tech, aerospace, machinery, things like that. They earn more. And it's important for technical know-how as well, right? So like between that, I think this is a very important part of the economy, durable goods production. And the good news is that's picking up nicely. Like I said, 4 good stories, right? Vehicle production, that's back to where it was pre-pandemic. High-tech equipment production, that rose above 1% in January, which is actually a very good pace. It's up 20%, Ryan, year over year since last year, right?
Wow.
Then you talk about defense equipment production. We talk about defense spending, that's rising. We didn't see that after the financial crisis. Defense spending was up just under 2% in January. It's up almost 14% year over year. And then aerospace, I think, is a bright spot. I think I've talked about that before. I mean, I know Boeing's having a hard time figuring out how to keep doors attached on planes, but overall production of aerospace and parts, that was up 3% in January. It's up 12%, from last year, right? It's running, close to 10% above where we were before the pandemic. So 4 good stories there: vehicles, high-tech production, defense production, aerospace. I think that's good for manufacturing know-how in the U.S. And like I said, it pays better too.
No, That's nice. One of the big reasons we've been so optimistic, right? We said overall wages are growing well above inflation and have been for a while. So those are positives. But just to kind of put a bow on all of this, yes, there were some cracks, some weaknesses, some concerns on the economic front when you look at some of the data from January. But at this time, there really are still more positives and negatives. We think it's maybe potentially weather related. Maybe everybody spent a bunch of money getting ready for the holidays, and then they didn't spend as much in December. Like you said, restaurants and bars, people are still going out to those, though. So all in all, the economy still looks to be on fairly firm footing. We're going to continue to watch it every single day, every single week, every single month with this data. We just think right now the economy is not slowing down necessarily. It's just kind of more normalizing. And we expect the second half of this year, the economy to continue to expand and grow. And what does that mean to the listeners? It likely means no recession. And when you don't have a recession, this bull market that we're in for your investments likely can continue. So with all that, everyone, hope you enjoyed the latest Carson's Take 5. We'll see everyone next week. Thank you. Goodbye.